So, for those YouTube people, hello. Today is one of our live backtesting days, and we're just chilling, open mic. And you guys, by the way, in the Discord right now, your mics aren't being recorded. Just out of general privacy, I feel like that's just a safer bet, right? So, if you guys want to talk, I do hear you, and the YouTube recording does not. So, just a quick little heads up since this is an open mic session. I do not mind. You guys can unmute at any time, just talk or ask questions. I'm here. And now I will be sharing my screen. Let's try this. Let's try a HD and 60 FPS and see if my OBS is able to handle it and follow through. What's up, Darrell? How you doing, brother? Yes, sir. Yes, sir. And we also moved the call over to Sunday, if I'm not mistaken. Fair enough. All right. Sorry, I'm just not in the right document for some reason. Oh, there it is. All right, so you guys should be able to see my trading view right now. And whenever I start filling out the document, I can just switch over and show you guys this instead, right? So I don't want to continue on this May month because I feel like there's way more value, especially right with what Jan just was talking about the fact that we should do last week pretty much. So right, see this as some sort of review where you also get some insight into how I backtest and also for all the beginners, what is the rise model, right? And if we look at example via example, and as you can see from this document, am going to zoom out. I usually have this on widescreen, right? As you can see from this document, also how I interact and how I manage my trade afterwards, right? With all different objectives and such and so on. So that's how I'm going to be doing it today. Does that make any sense at all? Awesome. All right, so let's get this study up and let's get these guys out of here. As I said, I wasn't set up for this, guys. I'm sorry, I wasn't all ready for you. So I am going to dive. Last week we had beginning NQM and actually NQU. So we're gonna dive into NQM at first, and NQM was, I believe, the first 2 days. Right. Or did I switch? No, NQM was only Monday, and then the open interest on NQU moved it. And I think I talked about it in general. If you guys want another quick explanation, just tell me here. Right. I also have the chat open just from this call window. So if you guys don't feel like talking, then you can just dive into this. All right. So NQ1 is chilling. Let's remove the drawings here. NQM here, and we can dive into Monday. And yes, I already did a price action review here, right? But it doesn't go over the, I guess, the reasoning as to how I would backtest such a thing. If you guys want me to do any other week, just say it now. I just feel like this might be more useful, but I need your insight, right? So just give me a quick message here in the chat. Tell me what you guys want. Do you want me to go over the week that just happened, or let's just say the week beforehand? Talk. You want me to spread some sauce? That's what you're saying? The sauce comes along the way. That's the thing. It comes on its own, unimpeded by wants and desires. Okay, so Justin wants a specific week that he had a trouble backtesting. So there we go. Give me the contract, give me the week. We can dive into that. Might as well be specific here. All right. Pull it up, pull it up. By the way, for the people wondering, Justin right now is speaking French. So don't be confused. I am from Quebec, if you guys read the orientation. So my first language is indeed French, and I do have a lot of French students, Canadian students, but who speak French. So don't be surprised if you see a little bit of French here and there. I try and force them to learn English the best they can, but sometimes it's just easier to say it in French. All right, pull it up, Justin, so I'm not here sitting on my ass doing nothing. I need to get on my grind right now. Had a very slow day yesterday. Little brother graduated. Oh, February? Oh my God. All right. All right. If you guys did not know, I don't know if I talked about it before, but February was a rough one for me. A rough one. Yes, yes, he is my little brother. He he just graduated. Just graduated. Yes, sir. High school. So he's well, he's born in September, so he's turning 18 very soon. Fellow Canadians, yes, sir, bird dog. All right. So the week of February, the 16th, so 12th to 16. All right. So we have yeah, I'm gonna show you guys what I'm looking at. Well, actually, I'll just take the picture and drop it in my trading view. It's gonna be even better. Yeah, I'll save this. And if it's your first time joining a call like this, it's just the second we do, but we are very chill here. So it's not about being super quick, being on that grind. We're really just taking it easy, looking at price, studying price, right? You guys should be able to see this. So we have CPI early week, so no trading on Monday for me, only trading on Tuesday. Wednesday, no news, and then we have Thursday and Friday PPI, core retail sales, unemployment claims, basically 8:30 early news, and then 10 a.m. news on Friday that should act as some sort of expansion. But we'll dive into it more specifically once we get there. And the specific contract for that, we had the December expiry and then we had the March contract. So it should be NQM, no? Am I wrong here? No, because that's the June contract. What was NQH? Was before. NQH should be the expiry. Yeah, March expiry, December to March. Okay, I'm not that lost. Not NQH 2024. By the way, if you guys didn't know, if you do have the market data, you can go on any expired chart, and I believe even without market data, because some of my students had that don't even have a TradingView subscription yet are actually doing it. So you can just type it out. It won't show up in the search bar. As you can see, you don't see it. But if you type it out and you press enter, you can actually, oh, well, see, this one is the wrong one. So I put a 2. I can't type today. Thank you. You can actually just go on any old contract and it will show you the real trading view data you saw at that point. Because, like, for example, on some platforms, when they roll over, they actually change the data to adjust to contract changes. And if you actually look at NQ, you'll see that you have something that can actually adjust for contract changes. So I do like to have that on my higher time frame charts, and I don't like having settlement. I want to see the midnight close, not the settlement close. But you'll see from that that it does change the values a tiny bit. So if ever you're comparing your charts to mine and you're wondering why, that's because I have adjust for contract changes on, if ever you're wondering. So let's dive into that week, and we got to jump back. And this is the long march on TradingView, where you do have to do a lot of replay and then back again. And also, if you're unfamiliar, Alt G pops up this window. You can go to any date. Now that date was not on my chart, so I did have to go into replay mode. Okay, let's look at this. So again, just to review it one last time, I do not look at backtesting as market replay. That is not the same for me, and I don't see the point in market replay because all you can do is just demo trade live. if you do have a model that doesn't have a very high occurrence rate, right, you don't have a lot of setups, then going into market replay will allow you to basically get better at executing that model way quicker. So, okay, yes, there is value within market replay. But when we're talking about my specific model that is available every single day, no matter what you trade, this just happens. It's just how it is. It's just how the markets switch from a buy model to a sell model. They form a breaker block. They reverse with they have a smart money reversal, however you want to call it, right? You can call it manipulation, smart money reversal. Depending on what model you have, you call it a different name. But what is it? It's a fake move to get to a real move, a Judas swing. So that happens every single day, and that forms a breaker block, which gives you a unicorn entry. That's just how it is, right? So I don't see the value in market replay in that sense, because you can just go demo trade it and you have one thing every day. So if you spend a month doing that, you should have about 20 setups, and that way you can learn, and then when you miss one, you review it, you imprint it in your brain so that you know what it looks like, you know why you missed it because you remember how you were thinking and you journaled it, and you know how you can adjust so that it works, right? All right, so let's go look at our higher time frame analysis first. Again, I'm just still explaining my setup here, but I have my 1 minute chart here for executions. I have 5 minute here, which I do switch to a 15 a lot of the time. So I just do 5, 15, depending on what I'm doing with it, right? And you guys will see all of that. And then I have my higher time frames here. So I'm going to dive to February on my higher time frame. And again, I'm going to go into replay mode so I don't see the following days. And I do see the day. I'm going to remove new week opening gaps because I don't use them as much when I'm going over a simplistic approach. Right here, what do I see? Let's go full screen here. What do I see? Let's go to our weekly chart. Clearly bullish. We are looking, last week we just completed, right? A nice move out of this bullish fair value gap up to the upside. We have reached our weekly objective here, taking out the liquidity. And that was last week. So previous week took out an important weekly liquidity. So we would be looking for continuation or a reversal. Now, if we look at our current range and we look at our premium and discount, we'll see that if we want price to continue going up, we needed to retrace to a discount. Now, there are no clear discount inefficiencies up to this order block. So I can expect basically it to retrace all the way down here. But if it goes down here, I'm going to also expect it to start taking out sell side liquidity. So definitely a week where I'd be like, okay, well, let's wait for Monday's price action since we are not trading and gain more insight. And that happened, right? It's this candle right here. So there is no trading Monday. So I'm going to go over to the next candle, but it retraced lower. I'm going to look for either an immediate rebalance of this level or for this fair value gap to provide higher prices. And if this fails, this is where it's going. That's simple, right? So if I just jump one candle, you can clearly see what happened. We dove into it, clearly failed, and I'm going to look at my lower time frame charts to see how it failed, and then dove lower. More specifically, this is not a swing low, but yeah, no, more specifically, it actually did not even reach this. Is this a new week opening gap? No, new day opening gap. Large new day opening gap. So this will need to be revisited. What color do I have for this? Let me put this actually blue. Blue will work. There we go. So weekly objectives lower, definitely. And if we dive into a 4 hour, did we have a clearer? Oh, well, yes. After Monday's trading, I should have dove into that before skipping the day. But after Monday's trading, you did invert this fair value gap right here. And more importantly, displaced, seen through the formation of this fair value gap, displaced lower. If you see, that's 2 a.m., that's our 6 a.m. candle, and then we have 10 a.m. candle, which seems to retrace in the range. You also had beautiful relative equal lows at this level, which fortunately it reversed in the PM. So we'll dive into that on our lower time frame now, right? So just to go over it again, whenever I'm backtesting, I want to understand the day before I look for setups. And yes, you do want to think in terms of like, oh, what what would I have seen? But not really what would I have seen, but what should I have seen? That's how I reversed engineer my model. That is how I learned how to trade. I just thought of how could I predict this move? Not how I am thinking and what I would have thought at this specific time. No, because I know my opinion is not worth shit as an unprofitable trader, right? So I just thought, okay, well, how would I get this day and change my mind and understanding so that I could be profitable? Okay, well, I would need to know that since we invalidated um, bullish arrays, even in deep premium, that formed a move, sure, but we just formed a market structure shift and we displaced. So I understand that there will be, at the very least, a large retracement lower, right? We need to return to a discount and we are going to have an objective lower. Now, of course, these relative equal lows in the 4 hour are super clean. On the daily, there's nothing clean up until this new week opening gap in the order block. So I need to take into account both possibilities, right? Let me just mark this out a little better. So now that I understand how I should have seen that day, all I need to do is teach myself to see that stuff. So, okay, of course, well, invalidated this, so it supports the idea for lower prices, and then we formed a great bearish fair value gap. So would it make sense that we could expand lower, even if it's the manipulation of the week? Would it make sense that we expand lower to return to a discount of our range? 100%. That's just basic. We took external range liquidity. We're going to retrace to a discount of our internal range liquidity. All right. So now that we know that, and we know that we would have been looking for shorts, the rest is very simple. So just to go into a 4 hour here and make sure I'm on the right day, I am going to skip a day. So actually just going to put both of these on the daily and just skip one, and here skip one, and put those back in place. It did not skip one. So you do your thing right here for a second, and you skip one. There we go. So if we dive back to the 15-minute here, we should see everything we have to see. And actually, I do want to draw this 4 hour inefficiency here, so we can see the result in the sorry, I'm gonna get it. I am gonna get it in the 15-minute chart, which I can't see my inefficiency. Thank you, motherfucker. I think I told you guys a few weeks ago that I changed all of my settings, and it is getting painful. Okay. So this is the 13th that just started printing right there. As you will see, there you go. And we formed a London high of day inside of this 4 hour fair value gap. By the way, whenever there's CPI, what do I always say with CPI? Well, very simple. It usually runs onside with price, and then 930 forms a retracement into that fair value gap that was formed before continuing in the same direction. And if you want to test that, just go look, right? You have a profitable model right there. Wait for CPI to happen. In what direction does it go? Okay, that's your bias. Wait for a retracement into that. Then in the 950 to 1010 macro, you take a trade in that direction of CPI, you'll always catch 100 handles. And yes, always is not 100%, but that is a profitable model right there. If you don't believe me, I did test it. Like, just go see. It's actually some crazy simple stuff that would make any unprofitable trader profitable. Is that profitable enough for trading to be your only source of income? No, because CPI happens once a month, right? So definitely not. But if ever you're wondering, that is one way that I do to pass funded accounts oftentimes, because that is a very high win rate thing. CPI often runs on side. So if you just wait for CPI to happen, see which direction it goes, and take a trade in that direction after 930 Judas swing, then that's a profitable model. Just surprised, by the way. And all that to say that whenever I expect a trending day, which means what? Well, it goes in the same direction for the whole day, unless of course it hits a key level and then it reverses. But a trending day, clear daily power of 3, the high of said trending day or the low, right, often forms in New York, in London, sorry, not in New York. And New York is a continuation, and then PM is continuation slash reversal. That is a classic daily profile of just pure expansion. That's what we saw on Monday this week. If ever you want a clear picture, that's it. So whenever I see a potential high of day during a high of day candidate, right, during London, that's what I look at. And again, I told you guys before high of day candidate, I just look at my, let me just go at the right time. I just look at SMT at a key area, a key level. So what is this big green line? That's NQ1. So I guess that's my 4-hour fair value gap. But I do want to look on the 13th and see if there was any SMT present right here. So I am looking at London highs formed here. So it was higher on both ES and NQ and YM. So see, no SMT at this level. There was, well, there's no swing point formed here unless there is some higher time frame SMT. So no, this is higher, this is higher, this is lower, except on YM. So there is SMT with YM, or is it lower? Wow, no way. High at 39,731, high at 39,732. So it's actually lower. So no clear SMT on that end. And I'm also, yes, I'm looking at a 15-minute chart, but I'm also looking like if these were higher time frame candles, right? There is SMT on the highs with YM and ES/NQ from the previous day. So that is a good indication for possibly weekly power of 3. But as you can see, there was no SMT up until higher, 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 higher. Even then, I think we are looking at a day where we would be looking at some, well, we do have SMT with YM. By the way, just so you guys know what I'm talking about, because they're like, oh yeah, SMT here, SMT there. I am looking at these swing points. I'm looking at a 15-minute chart right here. So there is definitely going to be some 1-minute SMT there. And I am going to prepare it, which I don't think I can go back that far on NQ1. Yeah, because if I go in replay mode, it won't work. So I will, okay, let's do this. I want to do it the right way. So yes, it does mean that it will take time because I am slow and I am going slowly. That's just how it is for me, right? Sunday is a chill day. It's a chill day where we still have to work, but working slowly is okay sometimes. Only sometimes. You won't hear me say that often, just telling you guys in advance. Let's go February 12th. So I do want to be looking at 1-minute SMT very quickly, because that is what frames all of our setups, right? And let's go back to the study here. And I am tired of this shit, so just do play here. Give me the full day, please. All right, there it is. So going back to 1 minute, as you can see, CPI runs on side, right? We were bearish. We were expecting a retracement into our range, and CPI did exactly that. And if we look more specifically at the prices, which are on the line due to adjust contract changes. So let me just turn that off. Now we should be able to see it. Oh, it brought me back to the right time. So right here, if we see that price, CPI ran through this 4-hour liquidity right here. Which, you know what? Let's pop it up. And go back here. This 4-hour liquidity before targeting these relative equal lows right here. High of day formed in London, no SMT. So is it a high probability high of day? Not necessarily, but it doesn't mean it's not, right? So it's not the highest of probabilities because I don't have clear SMT. I had SMT on the previous day, which shows me an indication that the week does want to go lower. Now, my first objective, if the week was to go lower, would have been this low, looking at the 4-hour large range, right? Due to a market structure shift, I expect price to move from ERL into ERL, and then possibly continue expanding lower, which was seen through CPI, right? So clearly with CPI, we can tell that price expanded very aggressively lower, so I can expect a continuation to lower prices. Also, I like to use the new week opening gaps just to always have some sort of algorithmic signature, and just seeing expansion through it and then a respective consequent encroachment gives you an idea of what it is doing. But now I do have my 1 minute here, I believe. So let's go on the 13th because that's our first trading day, 9:30. And let's look at if we have any divergence. That is not the right session thing. That is something different that I am not supposed to show you guys. Whoops. Nothing much was shown. We're chilling, we're chilling. All right, let me pop this indicator up so we can see what time it is. So clearly, right now, I can already tell there is divergence. How? Well, very simple. 9:30 is the low here, while on ES, as you can see, it went down all the way to 1017. So this low, not even looking at clear SMT, ES was going lower, while you go away. Close without saving. While NASDAQ was going higher all the way to that 1017 swing point right here. So we did have SMT present on that day, but with so much SMT, how do you frame this? How do you frame your trade? Well, first of all, I wanted to see a Judah swing lower, right? And both price point went lower. So that's one thing. And then I'm only looking for shorts here. If you want to trade the aggressive approach, you would be looking for a long here into this fair value gap to then start looking for shorts. And that's what I do on all my challenges, but not on my funded accounts. What I do on my funded accounts is I wait for price to do its manipulation to then trade the distribution. That's just how I like to roll. And to be honest, guys, it's just a question of stress. Whenever I'm trading my model on my funded accounts, I just get one quick trade, just very, very high probability trade that I win close to, well, near to 85% per trade. So I like to keep my funded accounts with these stats. And then on my evaluations, that's where I can go a little bit more crazy, right? Keeping it simple, but a little bit more crazy. I'm just seeing something, which I'm not going to mark out on my lower time frame chart, but this inverted fair value gap, usually, whenever you have a big aggressive move, you won't have time to retrace into a fair value gap on your higher time frames, right? So if you're someone like me that doesn't use the hourly chart to form setups, basically you can use 4-hour inverted fair value gaps. And you can see from the prices lining up that our 4-hour inverted fair value gap was right here. So definitely you had a beautiful short setup here within a higher time frame PD array, right? Because you did not have any sort of intraday drawn liquidity. So one setup for life levels, London run, you are not expecting a London run due to how it was formed and due to the fact that you are bearish. So you filter that one out. You don't have a previous PM framework, and I don't look at the opening range gap, even though that would have been a possibility. If it would just form the idea that going lower is indeed good. No, because we dove back into it higher. So basically, you would have a trade into that opening range gap and then rebalance and then continue lower. All of that to say, you don't need it at this current moment because you had one thing. But you know what? Let's do it the right way. Let's go put it on the inverted fair value gap. So I'm not even going to put the high because clearly we've seen, analyzing with hindsight, that we don't need it because it respected it right away. So I'm going to call it inverted fair value gap low. And this is a 4-hour time frame. And if you inverse this fair value gap, where do you expect it to go? Not to this order block. Why? Because it will never go down to this order block and then not go target these relative equal lows, right? And how do we know that? Well, going on a daily chart, we use our range. You expect it to go towards that liquidity because it does need to revisit this area. It's that simple, right? If we can say it like that. So by the way, Justin, I hope you're following along because that's your first setup of your week that you said you had a little more problem with. Again, I say that every time, but whenever I have a large wick, just like whenever I have a large gap, I just pop my quarters on and look for algorithmic signatures within these levels. Respect of CE, I believe we went a tick over, if I'm not mistaken. Yeah, no, actually, because the line on TradingView is drawn at 790, but if you see the numbers right here, if I remove this, get that plus sign out of my face, please. That's when I'm trading on my phone, I have that on. But if you see right here, that's 790.25. So clearly we did respect it. And if we look right here at the close of this candle, 17,790.25, looking at this number, the open here is 17,790.25. So perfect algorithmic signature of price. It's not always this perfect, but this is an instance where you could not miss this. It is beautiful, right? Now, if we're looking for short later on during the session, right? Or the day, pretty much the morning session. What are you going to look at? Well, I do want to look at my 10 a.m. power of 3 and make sure that my trade aligns with the possibility of lower prices. Now, to have lower prices and to anticipate lower prices based on the 4-hour candle here, I would need it to retrace where? To my inverted fair value gap. So I do understand that there is an open low into a high, but that is okay because I did need it to return to this inverted fair value gap before continuing lower. So return to the inverted fair value gap right here. That's, you have your algorithmic signature. Now, one thing I do notice is that we don't have an early breaker form. So whenever that happens, I usually relate it to SMT. So I am going to go look at ES at that time. So 1044, well, shit. See, again, a lot of divergence. So Tuesday, 1044 is the high of the morning session, while on ES, the high of the morning session was formed at 1140. So 1044 is right here. So actually just seeing all of this divergence, I would have waited. Waited for what? Waited for PM session. So whenever ES and NQ aren't following each other, you can call it whatever you like, but that is very low probability. It leads to searching the chart. Just imagine, right? I just told you guys about a beautiful setup, beautiful reaction of consequent encroachment. See, NASDAQ wasn't acting up, but ES was doing some sort of bullshit here about continuing to go up while NASDAQ was trying to go down. So what does that lead to? Well, a lot of consolidation, a lot of retracements you don't anticipate. So definitely not the best. But yes, there is SMT, but there's SMT after SMT after SMT, which tells you one thing, that price is accumulating. So what would you wait for? Well, wait for the PM session. Now, of course, if you traded within macros, you did have an opportunity right here. Definitely 1150. That's just the first one that I noticed, but taking out this high and then displacing through this low. But now here's the thing. How do you choose that one over that one, over that one, over that one, over any of these, right? How are you able to filter that out? Well, there's no way. Time is the only filter, but time aligned before, right? At this level, you had SMT, you had everything you wanted. Oh, well, we dove lower here, formed a breaker block at this level, and then you'd anticipate a retracement into discount, of course, enter here. And yes, with the right stop loss, that would be a profitable setup. Because right here, you would enter, allow it to go all the way to fair value gap 1, fair value gap 1 order block. Actually, that would be a stop. And if you waited for a retracement into the discount, which is the conservative approach, into the premium, sorry, to short, which is the conservative approach. So I would wait for this inverted fair value gap. That's my first inefficiency in premium. And then the setup would be inverted fair value gap. I do have this order block, which I am going to count inside. And then I have the swing high right here with the liquidity above, which would be my third PD array in confluence with that inverted fair value gap. So see, 3 PD array stop loss rule. If you use the conservative approach, that would have been a win, right? Clearly. but that's not the easiest trade to spot. So, well, I am going to put it in my document because it is there, but that's not the kind of trade that you'd be mad at missing, right? Like I always use this specific phrase when I'm talking to students. They're like, "Oh, did you trade today?" "Oh no, I didn't trade today." Okay, well, it's one of those days where it's okay. I'm not gonna be mad at you. I'm not gonna give you things to do because I wouldn't be mad at all if I missed this trade today, because it was a lot of difficulty, and me winning was a bit in big part luck. And that's just how it is sometimes. You got to be honest with yourself. Some days are really, really fucking hard, and you're just lucky you were on side that day. What if you wanted to short? Well, I would have had 3 stops. Well, that happens, right? There is variance in trading, just like there is in poker and all of the I guess the work or the sports that are based off of probabilities and personal human action. We make mistakes. We're human, whatever. If you did not catch this move, I don't see any clear opportunity for continuation up until the PM. But even then, well, actually, no, because we did still have not reached our biggest low-hanging fruit objective, which would have been this, right? Definitely, this would have been our partial target. Let me put it up right here because you have clear inducement of this low, relative equal lows, and then inducement once again with SMT. Like that is a clear objective for the PM session if we are to continue to the downside. So since we had not reached that at the beginning of the PM session, I would definitely look for continuation. And just to make sure ES was now correlated, yes, 100%. Now that they both started dropping during this lunch session, as we can see it right here, I can allow myself to trade the PM since now price is correlated. Beautiful reaction off of new week opening gap. At the very moment of 130, I did form a breaker right at 130, right? So just so you guys have a little idea, looking at this high being taken out into breaking this low again at 130, this forms this last candle as a breaker block. What do I have at this very specific level? Well, I have a fair value gap here that we just inverted as well. So I'm going to put that as this, that we just inverted as well. So yes, the breaker block is above, which is okay, right? Because I'm only using the last down close candle. If I go into a 15-second chart, that breaker block would be beautiful and clear, and it would form the swing low. But I don't care about that. I understand time is fractal, and I like the pattern that I'm seeing at this very specific time of the 130 open, where you'd like to see some sort of Judah swing. So retracement into this, you see a beautiful reaction off of the order block following, but you would already be in since your entry is this inverted fair value gap. There's your unicorn. But then where is your stop loss? Let's see if there's SMT, because whenever I'm counting the 3 PD array stop loss rule, I use SMT as a PD array pretty much. So I think I do see SMT right here, if I'm not mistaken. I am going to go back. There's going to be a lot of back and forth looking at this SMT. Actually, no. So 27.31. It seems that we do not have any SMT at this level. Possibly during lunch. But actually, oh, well. 12:43. Is that 12:43? Yes. So, yeah, I'm not going to dive into it very again, very in-depth, because there is a shit ton of swing points in my 1 minute chart, and I do not need SMT to frame the trade, even though it would be nicer. Both went higher. Okay, so no SMT at this level, so it would be a lower probability setup, if I can say it like that, but it doesn't mean it's not a setup worth trading, right? So that's up to you guys. Again, yes, there is a lot of you can do this, you can do that, you can do that in my model, but that's because I wanted it to adjust to any type of trader. And some traders want to be trading aggressive, and some traders want to be trading very conservative. For a conservative trader, missing a day with, what is that, barely 100 handle range? Oh no, that looks like a 200 handle range. After New York, right? Oh yeah, no, so that's actually a pretty decent day. You had 214 handles. And for February, this was pretty decent. So I guess you could be mad, but if you had other days and blah blah blah, right? That's just all going into trading psychology. So definitely not something I want to get into right now. But there is a lot to adjust in this model based on what you prefer. But right now, just looking at a mechanical approach, this is a setup, so I am going to look at it. Stop loss would be, we have this inverted fair value gap as our first PD array. We did not form any fair value gaps in this leg, so we would use this order block as the second, and I guess I would allow it to sweep that high. That's what I was saying. Basically, if there was SMT here or here or here, well, this was after, so not here actually, I would just place my stop at this swing high. But no SMT found, so definitely this will be my intermediate term high that I will be using as a stop loss following my 3PD array rule. And now, as you can tell, just from your low-hanging fruit objective, which I always spot very easily, but if you guys want a clearer picture, why is this not showing up? Let's do this instead. So premium and discount. If you guys want a clearer picture, that is my clear discount objective after invalidating my basically I was looking at the bottom right. See how we closed below this 15-minute gap? That's where I'd want to see price form or set up to continue lower. And I'm basing all of this understanding on the higher time frame direction that I have, which was we go lower towards these equal lows, right? Which are they these? Yeah, these ones, because I was also looking at these ones. But this is my higher time frame objective for the day. So definitely I'm going to expect it to disrespect bearish arrays, but I'm still going to have a low hanging fruit objective. And since I'm expecting it not to respect that order block, what clear level do I have, right? Whenever you just open this chart and you're here and you're like, okay, let's just say I knew it was going down. Where is it going? There. Why? Because there's equal levels, and the algorithm always targets levels that are too clean, to say so. So definitely, you had a beautiful setup there. And of course, this is based on an intraday continuation and just more specifically time, right? You have your 15 inverted fair value gap right here, which started at 1. If ever you're wondering, it officially inverted it at 1. So now you trade back into it, wait for time to align, then judo swing gives you your entry within the recently inverted fair value gap with your breaker block all the way to a low-hanging fruit objective right here. And I just thought of it. If you guys want me to fill up the document, I'm going to fill up one with you guys. Because just based on the amount of time I'm spending on just talking on the charts right now, I don't want this call to be 3 hours to look at 5 setups, right? So if you guys want me to fill out one within my backtesting template, tell me now, and I am going to fill out this this possible morning setup. Since do it, all right, I'll do one then. So even right, we already went into it. Even though there is all everything we can say about uncorrelated markets, I wouldn't want to be trading my accounts. I would not have traded that specific day. But based on the model, there is a setup. So I do want to take it into account. And yes, guys, I'm not looking at losses because I want to analyze the winning setups and see what do they have in common so that I can only trade these winning setups. It's that simple. And then you got to teach yourself to see the losses and not take them, and only take the high probability trading setups, which are the ones that have the higher chance of winning, right? That fucking stupid and simple. You don't have to go more in depth than that. I'm going to remove my drawings on this chart because they are messing me up since I removed the adjust for contract change option. Looking at this, the first breaker that was formed after my algorithmic signature within my higher time frame point of interest. Let me just put that a little more aggressively. Inverted fair value gap low at 4 hour. Actually, minus FVG. Let's just make sure I can know it's a bearish fair value gap. And now from what I see, yeah, I am going to use this specific breaker block at this level. which seems like the first we formed. I could dive into a 5-minute chart, probably find something over there, but I am going to concentrate on the 1 minute, try and keep it mechanical. So if this is your breaker, this is your unicorn. But there is one thing that I always say. Whenever we've already expanded, and that happens usually when, see, like this is a lower time frame breaker block, and lower time frame from the 1 minute is 13 seconds, 15 seconds. You do have a 15-second or 13-second fair value gap right there. Breaker and fair value gap, which forms a unicorn. I'm telling you guys, I'm gonna get it. So a unicorn right there, and you did have an entry, right? Put that in my 1 minute, and I utilize my 1 minute to execute. So whenever you expand, or you already expanded a bunch, I like to look at the continuation model, which I did look into in one of the price action reviews. I believe it was on the Monday or Tuesday. So if you guys want to know what the continuation entry and how I get into it, it's going to be in the price action review from either Monday this week or Tuesday, which today is the 22nd, if ever someone's watching this on YouTube. So I would wait for retracement into my premium and efficiency, then wait for it to see it respect it, and then enter on a change in the state of delivery, basically a confirmation of on-side movement. So my first premium and efficiency is this inverted fair value gap, because this fair value gap is not in premium, it's at equilibrium. So I have my inverted fair value gap right here. Did we respect it? No. So I'm going for the next one. This order block, did we respect it? Clearly not. We close above my order block, even just trading too deep into it. Now, what else do I have? Well, I have liquidity. But my first premium liquidity, we swept it. And now, from this point on, I'd be waiting for confirmation of on-side movement, right? That's simple. So now I've seen that it's done its retracement. If it is to continue lower, it's going to continue after, and I'm waiting for confirmation. So that confirmation can come through the creation of an order block right here. And for an order block to be created, by the way, not confirmed, but created, I want to see a close underneath it. So that's order block created. Then we dove all the way down here, traded back into it, and we are respecting consequent encroachment. So this is one of these rare cases where I am going to be taking an entry off an order block. That almost never happens. Like, truly. And my stop would be at this one high, kind of like if I was taking the turtle soup here, but I waited for confirmation, right? Because for this continuation entry, my whole idea is voided if we disrespect this high right here. Because my whole idea is based off it has now done and it's finished with retracing higher. That's what frames the idea for the continuation from this first expansion. So if it doesn't do that, then I'm dead. And I'm going to be honest, now the cleanest setup would have probably stopped me out break even right here if I didn't stop out manually beforehand. Well, actually being up a certain amount of R here, I would have definitely. But that's hindsight thinking. So I am actually not going to put this one in my document. So I guess we're going back to the PM session. Sorry about that, guys, but it's a setup that is too complicated for me to simply put it to a beginner. Right? It's easy to explain at some point, but once there starts to be a little too many moving parts, I don't want to attach myself to that setup because it's definitely a hard one to see, and you don't need to be able to see the hard ones, right? You just need the simple ones. So let's look at the simple one. PM session, you're waiting for 130 before you trade. You're not expecting a lunch trade because we are going lower, and what do we have? Well, we have bearish objectives, right? So the partial right here is based on our intraday range at this level. Partial, it's the liquidity below this low, which is actually just an inducement of these relative equal lows. So that is my clear low-hanging fruit objective for the day. Now in this trade, I would possibly have a different low-hanging fruit objective, but seeing the RR with the wide stop, well, not so wide stop actually, but 2.82, that is a perfect distance for a low-hanging fruit objective. So let me just make sure it's at the same. So this is one tick not low enough. What was it? So it's 28.25 actually. So 28.25, I'm gonna get it. Nice. So 2.82R right there. And then you do have following objectives with the, if I can place a line at the right spot, current low of day. You can call it the low of the morning session, current low of day, whatever you want to do, right? Current low of day. I like to use these terms because they're just simpler for me because I use the same ones everywhere, right? And then you have your relative equal lows, which are your relative, let's just call them what they are, 4-hour equal lows, right? So now I'm going to be doing a lot of back and forth. So I am actually going to change something. Let me just move some files over to my other screen for reasons of privacy. Now this should be clean, 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 and I can share my full screen with you guys on Discord. Just confirm with me once you guys start seeing it that you can indeed see it, and you can also see my Google. Awesome, awesome, awesome. Is this too small? Because I can just zoom in and then move aside if it's better. All right, so let's just zoom in and do it side by side. This should be fine, correct? Give me a little sign. All right. All right. So we are looking at what day? We are looking at February, and we are looking at the 13th of February. I do want to include a time because I want to see the times. So right here, this is a little too small, so I am going to zoom in just so I can see. Just by clicking on my box right here, you can see at the bottom, I see that that trade was from 1:31 p.m. to 2:04 p.m. And I always use the time to my low hanging fruit objective because I want to know how much time before I could take money out of the markets. And after my low hanging fruit, I'll leave a runner on for a few hours. Who cares, right? But just I like to use the time so that when I get my average duration, I can know average duration before my low hanging fruit objective, before my take profit. Now, no macro was utilized at this specific place. Tuesday, this was CPI. So Tuesday CPI. I'm looking at May 15th and February 13th right next to each other. It's messing me up. We were looking at a short. Whether here you want to call it a market maker style model or you just want to say long and short, who cares, right? I know that if I'm shorting, I'm always trading on side with my higher time frame expansion. So I am trading a market maker sell model. If I zoom out, if you guys have the template in mind, you'll see it, right? I can just frame this as original consolidation, or I can tell you the easy way to look into it, which is what? Look, relative equal lows. No need to go further than that. That's simple, all right? Relative equal lows. Power of 3, based on what? Well, based on my daily chart, and that's returning back to the fact. Second. So just going back to my chart here, it's going back to the fact about my London, right? If you guys remember, London formed here, so I'm going to expect today to be a trending day, just continuing lower. So I am using my daily power of 3 here, and I'm not utilizing my 4-hour power of 3 because I am entering before the 2 p.m. open, right? Which I'm expecting an open high because I'm bearish. So open high, expand to a low, then close, right? That's what I'm expecting. But I can see there's another setup, which we'll dive into it afterwards. So now going back here, let me just make sure I press on the right button this time. What is my entry? Breaker plus inverted fair value gap. I like to separate them just because oftentimes I just review them, and basically this is one of the things that could allow, like, see right here, this is a continuation entry. So the entry is on an order block because it's a continuation of this because we already expanded too far for me to take a simple unicorn. That simple. Well, not very simple, but yeah, that's what I'm talking about. And just so, well, I do have this setup, I want to know, well, is it worth it to take continuation entries on order blocks? And then I'm going to look at all the winning setups, and I'm going to see a 2% of my setups are from order blocks. So at this point, I know that if I trade an order block, there is a 2% success rate. Because from all my hundreds of backtesting, I can notice that there are only 2 winning setups with order blocks. I know that all the other ones that formed were losses. So how do you build a rule based off of that? Well, I don't take continuation entries based off order blocks, which kind of what I want to do here. And again, no macros, so now we can skip ahead into our drawn liquidity. Was there SMT? On that specific day, there was a shit ton of SMT, so I am going to mark it out. But was it the cleanest SMT? Not really. It was not the one in nearest proximity, but there was intraday SMT pretty much. So it is click worthy, if I can say it. My first drawn liquidity, low hanging fruit, was equal highs / lows, which why am I not marking that out as internal range liquidity? Because I'm looking for an expansion lower. So if I was to target internal range liquidity on that day, I would be targeting this order block, and I'm not. I'm targeting the liquidity below because I expect an expansion below that order block. So equal highs / lows right here. Next, my drawn liquidity is what? Well, the same thing, but it is higher time frame external range liquidity. Now, whether you want to name it higher time frame external range liquidity, if I see right here, or relative equal lows, to be honest, I'm actually going to mark them as relative equal lows just because they are, and more specifically, it is a difficult understanding to call this external range liquidity. It's more specifically internal range liquidity, but I am not willing to get into the specifics of why this is internal range liquidity right now. So definitely, I'm going to mark it out the easy way. This was your objective because they were equal highs / low. Now, this simple thing, HSDOL, that is your hindsight drawn liquidity. That is the furthest it could have gone. And now we can tell that it reversed for the rest of the PM session at this specific level. So again, I'm going to remark this and put equal highs and lows because it's the same, right? It's the same one. I'm going to put the chart last inside of it. Now we head over to the specifics of the data that I like to analyze. So stop size. I just click here, 18.25 stop size. So we are going to dive into it, 18.25. I want to load the distance to my low-hanging fruit objective, the distance to my final objective, and then the maximum amount it could have ran. So if you can see here, I would have liked all of my trade stopped here. But if I always notice that there is a big difference between my final take profit and my max runner, the max run it possibly went to, I know that it is profitable for me to leave a runner on after my final objective. Even if it's just one tiny little contract, I know that my setups run way further than I take profit, right? You can see right here, this one is the same. This ran almost 100 handles more here. Well, this is just one example, the one crazy example, right? That ran almost 300 handles more, but that's like one that you got to take it out of the spectrum, right? That is not giving you any information because it's just one specific example. But I like to use this data to then, once I have around 500, 600 setups in this document, I can utilize this to create rules, and also more specifically for my trading bots. I like to use this as data that I can later analyze. Now, distance to low-hanging fruit, right, which I marked out as partial. I prefer that instead of having low-hanging fruit, 51.5. So going back into here, 51.5. And as you can see, I do have formulas that automatically count this stuff for me. And whenever it's empty, it's kind of like if I got stopped out break even at the second one. So basically, let's just look at this example. I had a first objective. I did have a second objective, but as you can see from the result, it would have returned to my break even, which was about here, and stopped me out. So it did not reach it, does this. So this is the return if I took everything out at the first level, and this is the actual return, counting all the objectives into it, pretty much. 51.5 to this. Now, would I have taken a partial here? Probably in a real trade. But the truth is, I already took my low-hanging fruit, so now my objective is these 4-hour equal lows at 17,554.25. I'm just going to do it manually. 554.25 here, which allows for 6.88 R and is 125.5 handles. I do want to return it here for the following picture I'm going to take. So 125.5 handles. So now that I have this, let me just put it back. All right. I do want to look at the max runner. And as we've seen from this specific day, that your max runner was your objective on the higher time frames. So now just use this and put up the same number, right? Because that's the furthest it could have went. So now just to go back into the same data, the more setups that I see where the difference between these two number is near, that is basically a number I can turn into a percentage and know how precise my take profits are. I don't know if you guys got that. It's simple math, true, but it's still math. And I don't know about all of you, but I know I wasn't in school for a while, and getting back into math was a little bit of a hard time, to be honest. I am going to update this RR column to show my realized RR. So taking into account specific take profits, but that is kind of hard since contracts are always whole numbers, and I can't, like, if I have 3 contracts, let's just say I had 2 contracts here because of a wide stop, then I couldn't take profit here, and well, I could take profit 2 here and 1. So 3 is my minimum. So 2, I need to take out 1 and 1, which is just not something I want to be doing. But yes, now we go into the beautiful picture. So I want to see my 15-minute. So I want to see what I utilized. I want to see my 4-hour with the clear just objective. And then I see on my lower time frame chart that I'm using an inverted fair value gap. So let's draw that inverted fair value gap right here, because this is NQ1, so the drawings aren't aligning with this. I am also going to show this, show that we also retested this low. Well, actually barely did not retest this low, but it is still going to be there. And then I want to show the result right here. Well, we can see the result from my 15-minute chart, so I am going to zoom in. Oh, it's not this one, it's the PM short, sorry. So right here, beautiful. And as you can see, I did not need to use standard deviation. I'll just download the image basically, and then once I go back into Google right here, I can just choose the file, take the first download I have, and there we go. Now I have the image in there, and whenever I'm reviewing my backtesting setups, I can just come in here and see this. So I did spend a shit ton of time sorry, doing this specific day and setup and looking at everything, but I hope that helped you guys. I am gonna look into the rest of the week. Well, 3 days. We've been here for only an hour. We can do another few days. Where is it? Where is it? I believe I had my news somewhere, but now I just deleted all the drawings, so I am not. But we had Tuesday trading, and you know what? Let's dive right back into it. Why not? I'll just leave my whole screen on. Oh, well, actually, I will return to trading view because I won't be filling out the other ones. I believe actually February 20th, around that part, is when I made this Discord and actually started doing price action reviews, but on my side. Then at some point I did make them public. So yeah, just a fun fact I'm reminiscing here. So next days of trading are the 15th and the 16th with 8:30 news and then 8:30 10 a.m. news. So that's what we're gonna dive into. Let me just adjust the screen so that you guys can see my trading view correctly. There we go. And now let's look into it. I don't know if I'm still in replay mode. Yes, I am. Okay, now please work this time then. So I should be able to skip one day. Show me the 15th. Yeah, and let's, you know what, let's show Friday as well. And right here, this chart should be in replay mode too. Yep, so let's just do tack. This is Thursday, and then show Friday as well. All right, so going back to a daily chart, right? Because we did have our objective, our lower objective, 4-hour relative equal lows. But what was our daily objective? A retracement into, I do need to readjust. Oh, there is a lot of divergence here. Daily objective, I'm in June here. Sorry, guys. There we go. We are back. And I just moved us to SPX. There we go. I'm going to put this in replay so that it doesn't always go back to that part. There we go. So our weekly objective was to go down here. So you'd be looking for shorts down here. But what we've seen from our last trading day, and more specifically now, you would not have traded on Wednesday. So you were waiting for Thursday, right? So what would I have been looking for if we don't see this candle, right? I would like to see a continuation off of this fair value gap they just formed, right? Going lower. And as you can see, we did close above it, and we even closed above consequent encroachment of this order block. So we did retrace very aggressively to the highs, if I can say it like that. Right? Looking at the daily chart here on ES, 16th. So no SM. Well, there is SMT, but using a PD array. So we dug into this resistance block here, while we did not on Nasdaq. So just an indication of strength, pretty much. I would not use this as full-on divergence, but it is an indication of how ES is stronger while Nasdaq is weaker. Just to keep it simple, I would have looked for a short based off of this daily fair value gap. And we can tell, right, that it did not happen. And then my objective being this new day opening gap, this large new day opening gap, which we do have to rebalance, and this order block right here. Diving down to the 4-hour, same thing, right? You would look for retracement to premium. I would never have looked for retracement that deep. But when do we start trading? Well, 8:30 on Thursday. So it would be basically after this candle. So, or during this candle. So basically, you're never getting the chance to short here up until it gives you super clean 4-hour price action, right? And we had PPI was on Friday, I believe. But we'll dive into the 1-minute chart of this specific bias. So there, my bias would have been short, and I would have liked to see it react way lower. That doesn't mean it can't react at that specific level. It just means that's where I would have the best available setup. And we can tell clearly that it did not happen there. Thursday, let's go over to Thursday here as well. Thursday, 9:30. We had 8:30 news right here. Let me put up a beautiful little red line and remove that one. So 8:30 news. We do have London over here. We took out London highs, and also, yes, we did take out London lows overnight as well. So right here, overnight trading, anything before 9:30 is what I call overnight trading, by the way. I'm seeing a very high chance of divergence at this level. So we'll compare our 15-minute charts here, and more specifically, I believe we can compare in confluence with London highs. Exactly. So as you can see here, 8:30 took out London highs, right? You can tell, is this the right time? Yes, 8:30 did take out London highs, which is this purple box. And on ES, it was not 8:30 that took out London highs at all. So basically, you can understand that there is divergence between the 8:30 highs and this. So I'm not specifying the specific high where I saw it. If I want to do that, I'm going to go to 1 minute. Right now, I'm doing like what I do during my pre-market analysis. I look at what happened and I see, okay, well, I know there's SMT here. So these are the specifics. And if I want to find SMT, short-term SMT, right, with a setup, that's when I'm going to be diving deeper into my 1-minute swing points. And just my setup right now is not the best, so I'm going to try and find a way to go like in replay mode. And I'm looking on Friday, actually, at the moment. I'm trying to look on Thursday. So see how lost I am? It's not the best. It's not the best. Am I looking here? I'm looking at okay, I was comparing Thursday, sorry, to Friday. So actually no SMT at this 8:30 high. It actually came after 8:33, right? This was higher as well. Here I only see lower, and this was higher. It looks like there is SMT on the lows actually, with London lows staying open on ES up until that 8:30 Judas. There was SMT before. We don't care about SMT before the news. So let's go look at SMT after the news. Seems like there was just a lot of divergence. So what I'm looking at, by the way, seeing this, I'm looking at how ES was 930, was the low up until 1034. Whenever I want to go quickly, that's what I do. And then I see 930 here, and I see that NASDAQ just kept putting lower lows while ES was printing higher. So again, a lot of divergence. Again, I told you guys, February was a shitty month for myself up until the very last week where I just came back and clutched the whole month. So that was very lucky for me. I'm not gonna lie, I had a rough time in February. So even now, revisiting these charts, what do you see here? I see consolidation. Are there setups within this consolidation? 100%. There always are, right? And the biggest divergence I see is like this 830 high, which on ES we took out, and that's actually when price started following each other, right? If you look, 830 highs were taken out about at this time. Actually, it's for this low resistance liquidity run, if I'm not mistaken, 1023. So a little earlier, 1023. So these highs, and there was SMT, and then lower, a huge retracement before an expansion. So that's the type of day, again, which I wouldn't mind having a setup. Uh, I'm thinking about if I want to dive into it with you guys, or if it's not even worth our time. Because as you can see from this, like if we are to justify a trade, there's going to be a lot of chances you would have gotten stopped out first. So, and yes, you can justify a trade just based off of plenty of different things. But if I'm looking at the Rise model, what I see is 2 or 3 stop losses before the actual winning trade. And do I want to teach people to take 2 or 3 losses and then keep trading? No, I want to teach them to stop after 2 losses. That's simple. So yes, there were opportunities, but nothing that I see that was clean at all. So basically, if I live traded that day, I would have possibly lost money. And in the best case scenario, if I acted correctly following my plan, I would have taken 1 loss, 2 losses, then gotten out. Or possibly waited for a PM opportunity, which honestly just started consolidating at this level. If you look at the day, basically the cleanest move was during lunch. Right? The cleanest expansion happened during lunch. So definitely it did happen. There were opportunities to enter. More specifically, right, we did induce I was looking at ES, which we did induce these equal lows on ES, which we had already taken out on NASDAQ a while ago. So definitely nothing clean there, unless you were only looking at NASDAQ and ES, I'm sorry. I was looking at these lows, which we already had an equal level. This is not placed perfectly, but we induced these lows here. And then it's only when those lows were taken out. But then you'd say that, but why choose these lows and not these relatively equal lows as well? Why not choose a retracement into this? So they see most people who are trading and showcasing, sorry, had a little yawn in me. Sorry, guys. Most people who are showcasing taking a long here probably try to take a long here, take a long here, take a long here. Now I'm talking in general, right? Of course, because there are some people who have specific models where this would be an entry. I have one specific person in mind, right? But it doesn't mean that it is a high probability entry for your model. And my model is the Rise model, right? I showcased it, I talked about it, and on that day, there might be one, but it's definitely not the type of setup that I want to be trading because it is a high resistance day. And even though it ended up with a clean expansion higher, I want to be able to survive through this, and I definitely have at least 2 losses if I'm taking a mechanical approach. So basically, no trading that day for my backtesting. So I'm going to move on to the next day, which I guess I already kind of analyzed. Uh, let's look at this, and that was actually comparing to Thursday. Let's look at NASDAQ on that Thursday. So was there actually SMT here? We had 10 a.m. news and 8:30 news here on Friday. So let's look at 8:30 news and now 10 a.m. news. So right here, which means that you would be waiting for 10 a.m. before trading. And more specifically, you would wait 10 minutes after the news before starting to trade. If we look at the bias on that day, that's the one I analyzed by mistake the last time, right? You would have expected a retracement into the premium fair value gap, which we clearly disrespected. But as you can see from the 6 to 10 a.m. candle, we formed a large fair value gap. So basically now I'd be looking for my setup to form within this fair value gap. Does that make any sense? I'm guessing yes. No answer means yes, by the way. So if you guys don't answer me, I'm taking that into a yes, pretty much. So 1 minute chart, I just wanted to draw the higher time frame point of interest, which we did revisit a lot during the day, but you'd be looking at 10 a.m. As you can see, this is my 10 a.m. 4-hour candle. We just took out liquidity here. You would anticipate it to retrace into your, let me just put that red actually, into your premium inefficiency of this very recent range before continuing lower. And of course, you still had lower objectives up to this, which was actually your the large new day opening gap, with the low of this being the opening price of your order block that you're targeting. So these are your objectives. You do have more objectives there. We can see that this week we expanded lower, had a very deep retracement, and now on Friday are continuing our expansion lower, which is forming a classic buy week. Well, Monday high, Tuesday low, so an inside week, and you're anticipating that these to be your objective pretty much. So you have lower objectives, is what I was trying to say so hard. With these lower objectives, what are you looking for? I'm looking for a Jew to swing higher. If I don't have a Jew to swing higher, I'm anticipating higher prices. And in this specific case, I'm looking for a retracement into this fair value gap before expanding lower. Can you trade this move? Yes. Is it the highest probability move? No, you're trading a retracement, higher time frame retracement before the expansion. But can you trade it? Yes, because oftentimes when you're trading New York, you'll notice that sometimes the expansion happened during London, and New York is actually just a retracement of that expansion before New York PM is a continuation of that move, which often leads to 200, 300 handle days, but still is not just the cleanest move to be trading, right? It's high resistance because you're trading offside, but you could still be looking at setups. First off, I will mark out my 10 a.m. open, and I'm going to first start by looking at SMT. Feel like this is always the best way. And I see already 10 a.m. low, 10 a.m. low, right? So if there's SMT, it's going to be after. And just looking at 1012, 1006, 1006, 1012 makes sense. We broke the 1015 low, which 1015, I guess it's that low. Broke it. I guess 22 possibly. Yes, sir. Okay. So first SMT is here. Let me just dive that a little bit lower. SMT with the yes. And just to showcase it on ES as well, you have this swing point, which the two following are higher, right? So you have your SMT right here. You'd wait for SMT as a confirmation unless you had a higher time frame SMT. But just from looking at these charts very quickly, I can notice that there isn't, or it's hourly. And I disregard hourly because I already know my expansion, and I already have, oh no, this was the fake SMT actually. Sorry, I'm looking at ES. I can actually go look. I'm gonna try and do it the long way, if I can say it. See, ES was already expanding very near. Oh no, that's in the PM session. All right, but here ES had taken out this and took out 16, which is previous day highs. Looking at my 15-minute chart, took out previous day highs as well. In the morning, expanded all the way down to previous day low. So there was actually SMT supporting higher prices. To see how ES in the morning right here actually took out previous day low, but not the lows of the Asian session. Sorry, I'm still trying to figure myself out because there was so much divergence that week. It's crazy. So this is my Thursday, and Thursday, see there was divergence here because on ES we left this open. That was failed SMT into failed SMT. So basically just took out liquidity. I'm not looking at any important SMT. I'm not seeing any important SMT outside of the fact that ES was stronger since it had not taken out the Wednesday Asian range lows, right? That's what I'm seeing. Since I'm backtesting this, I'm trying to make it simple. I'm backtesting all NQ and all ES. So even though ES was stronger and NASDAQ was weaker, I am going to be looking at the setup. But we did have higher time frame SMT based on this little black zone I'm seeing right here, which was clearly taken, right? If I just draw it correctly, disregarding this swing low because it took it out on both. NASDAQ is lower than this, while ES is higher than this Wednesday Asian session lows. Make sense? Is this the type of SMT I'm going to utilize to form, I don't know, long-term ideas? Fuck no. But is it the type of SMT that I can use as confluence to my specific setup for today? Yeah, sure, that makes sense. So, first breaker formed right here, beautiful breaker block. Again, objective higher being, I'm going to mark it out correctly, our 4-hour fair value gap. This being our objective. You have your first breaker block form. Now, do you have a unicorn entry? I do see a fair value gap right here. So you would have had a unicorn entry if that is 10-10. So 10-12, yes. So you did have your entry here because as I explained, you would have waited for 10-10 before trading, and you actually had a first entry, which would have been this inverted fair value gap. You would not have expected it to retrace all the way down here, but you would have allowed your stop to. But definitely would have entered on the inverted fair value gap because in the best case scenario, it does not even it does not even start digging into this. And now for your stop, you have fair value gap, inverted fair value gap. That's 2 PD arrays. Then I have the order block. And as I said a lot of times previously, whenever I have an order block as my third PD array, and it is not the candle that formed the swing point, I will put my stop at the swing. And yes, it does seem hindsight now seeing that it barely did not stop you out, but all of my rules are based on stats, probabilities. And if the 3 PD array stop loss rule is the highest probability stop loss placement, then there's a reason for it. And it's because it works very often. So trust me, don't trust me. I'm not here to build fame. I'm not here to build trust. I'm here to share what I know to try and build this community further, right? Provide value. And your objective would be, that's your final objective, would be this 4-hour inverted fair value gap because you're bearish. So you're looking for a move to internal. So this would be my final objective. And it does not need to retrace there. And that's usually the types of times that I like to utilize liquidity. Now, there is no clear liquidity in between my 4-hour fair value gap and wait, I thought I moved the size of it. Between my 4-hour fair value gap and where price is currently, right? What do I have? Well, I have a large 15-minute fair value gap, but more specifically, I'm going to use my latest expansion range. You hear me saying that often. And what is that? The latest swing point to swing point that formed an impulse price move. So clearly, we formed a swing here, which formed this move. And now we formed this swing. So this is the current expansion range, the latest expansion range. Now I'm going to dive into my 5-minute. Oh, not on this chart, on the other chart. I'm going to dive on my 5-minute and look for a premium in efficiency. My first premium in efficiency is at this level. I'm not even going to mark the high of the fair value gap because this is just my partial. I don't need to know whatever happened along the way because this is just where I'm taking a partial. This is my low-hanging fruit objective. And just to add confluence to it, I am going to try and utilize my breaker block standard deviations. So lower time frame standard deviations. Wow. Terminus right there. That is beautiful. And if we utilized the full manipulation leg, we'll see that 2 and 2.5 is at the 4-hour fair value gap right here. I love doing this and seeing everything line up like that. It's just, if you guys are ICT traders, you'll get it, right? It's just so beautiful sometimes, and it's too beautiful. Oh well, actually, so beautiful that I actually used the wrong low, but here it is, right there. So it's actually a little less beautiful, putting me back in my place here. But yes, I'm gonna move that a little to the right. So we have your lower time frame standard deviations. I'm just gonna use these and put dotted lines so that I understand that they are worse than these, which I will bring to front and actually put a tiny bit bigger. And let's remove 1.5 from that one. There we go. You do have your breaker block standard deviations, which are way higher probability than the manipulation lag standard deviation, all shown again through the thread. And that gives your objective, which this is the 5-minute fair value gap low right here, as a partial because you expect it to retrace there. And then, of course, your objective is the 4-hour fair value gap, which is barely, what is that? Well, still like 27 points away. So that's a far for first take profit, but mechanically based, this is your first take profit. And if I was trading 3 contracts, I would like to take a profit here at this reversal level, then just take 1 contract off here, break even my position, take away the stress, then take profit another one here, and a final one at this 4-hour fair value gap. So just a specific example here. So Justin, I hope you're taking a lot of notes to fill these out into your document because I'm not going to be filling this one out at all into the document. But right here, breaker, inverted fair value gap. And of course you see that it disrespected it. You don't care. They're just the reason you enter, not the reason you stay in the trade. You stay in the trade because there are 2 possible outcomes, right? It's a win or it's a loss. There is no outcome where it's I pussied out, so now I have a win or a loss. That's not an option. There's no option that's also I greeted, so now my win should have been win is now a loss. That's not an option. There's 2 options: win, loss. And if you win, it's because well, the setup worked, of course, but also because you perfectly executed your take profits, right? So you didn't take profit early, because then it's not profitable, because all of your wins, which are supposed to be 2 3 R, are now all of a sudden 1 R 0.7 R realized because you're taking profits way too early. So you have your objectives, which are mechanically found, and then it's simple, really. I know it sounds crazy coming from someone that might not be profitable, then that is a lot of work. Sounds like a lot of work. But the truth is, all you have to do is do the same thing every day. So you're looking for the same thing. And if you keep doing the same thing, you just get better at it because we're humans. That's how it works. But very beautiful. 3.64R to your low hanging fruit. As I said, I would have liked to take profit at this specific level first, but that is not something that is model based. That is something that is experience based, right? I don't like leaving that much time into a trade. And right there, I'm almost up to R. So I guess I would have let it touch into it. Right here, we induced it. We did not tap into the fair value gap. Right here, we tapped into it. If you see like 1 tick more, it's probably 2R. So, well, yeah, pretty much a tick above is 1.99 and then another tick. So basically, I would call that 2R. So take profit at 2R, since we did give, this trade did give a lot of drawdown right there. Not on ES, which was the stronger asset, right? If we look at ES in the 1 minute very quickly, you see that that was just higher. So your entry, your beautiful unicorn entry right here at 1006 would not have even gotten you break even, basically. So you were chilling on the strongest asset. You also had cleaner objectives. But as I said, I like to analyze NASDAQ and then backtest ES and compare the days where, oh, well, ES was stronger on that day. So should I have traded ES? And then I can look at both documents and compare both setups that were offered on that day. So a lot of work that it's going to take me close to a year or two to get enough backtesting data to actually compare both. But then I'm going to have the backtesting data from the last 20 years analyzed by me and not only by my bot and by students and whatever, right? So I do want to build a big correction document, if I can say it like that. But beautiful setup, and it offered up to, what was it, 4.58R on your last take profit, which would have been, right, your 4-hour fair value gap, reversal zone, but I would not have targeted 2 standard deviations, as standard deviations are simply confluence. I do want to confirm that it did retrace into it. Well, I see it right here, but it did retrace into it at least later. So if this did not hit, well, right now it's not at the right level. This is at 1982.25. What is the high of this candle? 1982.25. So it retraced at it to the tick, but even then, if you would just break even on a runner, which is what I do, by the way, I'm not in front of my charts when that happens. I just have a runner, I have a take profit, and I have a notification so that if I get stopped out, I can cancel the take profit whenever OCO does not work, which is basically what links your stop and all your sale limit for your take profit orders to your entry, which then means that if you get stopped out, it removes them. But sometimes Trade of A has issues with that and it does not work. So I like to have a little notification on Trade of A app on my phone so that I can notice it. There's also seems to be a PM framework, right? Lunch trade framework taking out lunch highs here, unicorn formed, and very low resistance liquidity run, which is all based off of this 4-hour fair value gap. So there is a setup. I'll dive very quickly into it, right? Why not? Because after that, I am going to go because I do have other things to do and I talk too much, as you guys noticed. So as I said, this is the second time I do these types of call. As I do more of these, I am going to get quicker and we're going to be able to look at way more days than 3 days in an hour and a half, right? Which is probably going to be an hour 45 after I talk. So I'm still getting into it. If you guys have any suggestions or things you want to see, just don't be scared to ask, right? Give it your suggestion, sorry. So PM session, lunch trade, because I'm looking for a short, right? So let me just put that up. I'm looking for a short. Right here, we're already overextended. So I need to see some sort of retracement. Retracement where? Well, I'm going to look at my 15-minute chart for continuation, right? Where will that continuation form? At this premium. It already retraced to a premium. So I'm going to look at my latest expansion leg, which is, oh, I didn't mean to move that, which is this one, and which is way too small to be comparing to the full day. So what am I going to do? Well, the same thing. This did not dive into the 4-hour fair value gap. Oh, well, that's basically the candle that formed it. I'm sorry, that fair value gap was not even there before. So it could not have been your target for the morning. See, I'm getting tired here. So your target for the morning were the best on purely 15-minute intraday range and standard deviations. So if ever you put that in your document, Justin, you do have to adjust that high. The reason why it dug up right into it is because that's the candle that formed the fair value gap. Right, looking at the 4-hour chart here, the 10 a.m. candle formed the fair value gap. And then the 2 p.m. candle, after forming that fair value gap and closing right next to it, you would anticipate an open high into that fair value gap to form a setup. And why not? You also have the confluence from that being the raid of lunch. So that is also a lunch rate framework, intraday drawn liquidity. That is what I mean when I say A plus setup. It aligns with this. It aligns with price. It aligns with time. Power of 3 is perfect. Open high. And I'm guessing there's SMT there. Yes, it is just guessing at the moment. And I see it. With ES being stronger. 1157. Oh no, because that's actually higher as well. Yes, sorry. I don't see it actually. This is all lower, which this is higher. So I do have some 1-minute SMT at this level, right? 1421, 1426, I believe. 1421, 1426, which is actually a tick above, so no. Hello, Skypoa. How you doing? But I'm talking right now, so let's mute that guy. Sorry, guys. So I don't see any clean 1-minute SMT very quickly. So I'm just not gonna, oh, maybe here, but still then it's before the high, right? So I don't see any clean 1-minute SMT. I do have a lot of higher time frame SMT, right? As we've noticed from the long setup. Before the short, I'm looking inside the reversal range, 4-hour fair value gap form, and reversal range, I'm looking at the manipulation lag. right here, and I have a lunch rate framework. You don't need to understand all that to be taking that trade. You just need the very simplistic approach of, hey, I have a lunch rate. That's it, nothing else. The rest is added confluence that I like to talk about for an A+ setup. That's simple. So right here, what is our breaker? Well, we took out the high here. This is not a swing low, so I'm not going to regard this. And right here, we do have a range. We do have a breaker block, which is this beautiful candle right here. Let me mark it out as a breaker. And it's pretty simple to see. Oh, made the breaker block at this specific level. Oh, sorry, I utilized the wrong swing. Made the breaker block. What is right next to it? A fair value gap. And we don't enter on the unicorn fair value gap based on the fact that it will always be respected, and that's a high probability. No, just forming this pattern is high probability, but we utilize the 3PD array rule so that we don't get stopped out, right? So fair value gap, I don't have an inverted fair value gap to the left up until later, right? So fair value gap, order block, and then I don't have a fair value gap there. I have another order block. And as I just told you guys a second ago, whenever I have an order block, that is a swing point, but, well, is part of the swing point, but is not the swing point, I like to place my stop at the high of the swing point. Because sometimes if it digs into here, it will dig into the wick of this while still respecting consequent encroachment with the bodies. Right? I don't believe I missed an inverted fair value gap. This was pretty tight up until then. So right here, and what's your low-hanging fruit? Well, as I always do, I'd like to look at my latest expansion range, utilizing premium and discount. I'm going to draw up the standard deviations as well. Why not? So lower time frame, oh, that's not it. Lower time frame standard deviations, try and add confluence. But the truth is, I just head to a 5-minute chart. Let's put that center back, please, so I can start seeing the candles. There we go. I just use my 5-minute chart, and I find my first discount and efficiency. And again, I don't care if it respects the fair value gap or not. I really don't. All I care about is that it gets there, or my partial objective. So beautiful low-hanging fruit right there. Does look like it aligns with 3.5. Yes, it does. So that's just added confluence because it aligns with the level that you understand that that specific level is high probability. Just to have the right price. This is 17,844. So I like to just be precise with this because it's hard. There we go. 3.4 AR to your low-hanging fruit. From the point where it flipped at 2 p.m. open, there's your sauce that you wanted, by the way, Terrell. From the point that we flip the 4-hour open, I do not want to see us close back above this level. Why? Because this is my manipulation of my 4-hour candle. And this, in my mind, should be protected. It's that simple. This area should not be revisited. And oftentimes when it's consolidating, it can retest that level, wick through it, but you'll always see the bodies respecting the open. So with that understanding, what does it mean? Well, it means that after we pass this level, test it up, I'm just break even. This is one of the trades that I love because I'm just break even at this point. We already expanded. Retest the level, expansion. Well, I mean, you wouldn't even have time to put yourself break even because your partial came so quick, right? And that's 24 to 45. So that's actually 21 minutes. So average, pretty average, to your low-hanging fruit. And then you have partial, and then you have lunch low, which would have been my final objective, but then you don't have a clear final objective. You're just expecting it to keep expanding lower. So you're just going to hold and trail your stop loss. And seeing this, I would have held until 4 and just stopped right here, right? And that's if you held past this low. But if you already had a win in the morning and you're trading the PM session, well, at least for myself, I would have been out very quickly. But what was that? 6.82R in the morning offered something around 3. I don't remember. I believe it was around 3. So definitely a lot of possibilities on that day. And of course, trading New York, a session like I do, waiting for news, you would have had no opportunity for this, 300 handle short, right? That some people trading London might have taken, or Asian, but you did have your opportunities, right? You had your whatever that is, about 100 handle move that gave the opportunity. Sorry, gave the opportunity of up to 150 handles, followed by another move that gave you an opportunity of up to, actually, did it reach this low? Well, not before 1605, and if you're trading props, no. So the opportunity with a framework of about 170 handles again. So if you traded those two trades and did not get stopped out along the way, you would have made more than the person taking the short at the high day. Been a little less comfortable though, but still, the opportunities were there. Now, if you guys have any questions, now's the time, because I'm going to stop the call here. And as I said, the more I do these, the quicker I'll get and the more organized I will be. This is still pretty new, being the second live backtesting call, but I hope I can help some of you guys still, even though I'm still figuring this, I guess, this structure out. Pleasure, Justin. Conditions. Yeah, you were saying it right. Don't worry, brother. Okay. So, as you say, right? Because what you're saying, just to reiterate, right? You're saying that, hey, well, you have a rule that when you're at all-time highs, you're bullish until proven otherwise, right? So that means, yeah, how do I get proven otherwise? Well, very simple. I look at a reason to go short. And as I explained, the main reason why I was going to be looking for a short on that day was because of CPI. I know that CPI runs on side. And that's not more often than that's the very high majority of the time CPI expands in line with your objective. So even if I was looking for higher prices here, I would see this CPI and I would revisit my ideas. And from our daily standpoint, right? Yes, you're at all-time highs, as you say, right? You're just expanding to all-time highs, but you do have to retrace. And I use an understanding of daily internal to external liquidity. That is what frames all my frameworks, right? All of my weekly outlooks. What do I look at? So let's just say we revisit Tuesday. So after taking out this high, and we also saw it on the weekly chart, I believe, which was some important weekly liquidity from this move, right? I'm anticipating a retracement. Now, can that retracement stop at this order block and keep going up if we're very bullish? Yes. But my main objective, until proven otherwise at this point, is here. Even though we're in all-time high conditions. What I mean by bullish until proven otherwise is here I'd be bullish, here I'd be still bullish, here I'd be still bullish, until proven otherwise is what? We have a new week. So I do understand that that week has to manipulate. And that's what you mean about weekly profiles, which basically I'm just saying, yes, you are right. I do utilize weekly profiles, getting into it. But I did want to go through the whole logic first, right? So seeing as this Monday candle, right? Opened high, right? And if we look at Monday, let me just zoom out very quickly. We open the week here. You can see it from the blue line. This is pretty much our new week opening gap. So you can see it as the open, right? So open, and we opened and high, and then started expanding lower. What does that tell me? Well, at this current moment, my weekly manipulation was higher. Opened high, and now we're expanding lower, which means I have a lower objective. Now, again, as I said, it could be closer. But from that point on, I'm trying to look for a place for it to reverse and continue going higher. But that place is this large inefficiency in discount, right? Because I was looking at my premium and discount, and let me just actually mark it out correctly. My premium and discount, and the fact that this inefficiency is not in discount, right? It's at equilibrium. So that's where I would go to a 4-hour chart to get a more precise understanding. And I was looking at that same range, which I don't know why it just looked away. This is my daily range. And I had these clear relative equal lows. So I'd be bearish until then. And I don't believe I looked into the long of the PM session, but there was an opportunity to long at this specific level and a unicorn, actually. So for Tuesday afternoon. So just to go back over it, because our week opened high, I was expecting Tuesday to go down no matter if Tuesday was going to be the weekly manipulation. So, manipulation lower to then expand higher, or vice versa, which was basically Tuesday would be just an expansion and Monday would be the high of day. And if you want to learn about basically the only weekly profiles I use, it's AM trades. I don't know if you're familiar with him. You can go look at him on Twitter, pretty much just AM trades. If you want, I can probably find his profile after this and just send it to you. He made a full document. Yeah, I'll just drop his document somewhere in here. All my understanding of weekly profiles are based off of him, by the way. And it's from his explanation that I then came to a deeper understanding on my own, but it was all based off of his content. So I don't mind. I'll actually drop that in general right after this call. I'll just find the document. I have it somewhere in my computer. It's just weekly profiling, and it's understanding that you either have trending weeks and you either have reversal weeks or you have consolidation reversal weeks. These are the only possibilities. It's always one of these, and it's always framed by news. And if you want a clear understanding of that, by the way, when I was talking it after you read through the document, right? Just go look my weekly outlook from this week. And actually, do it even simpler. Go on my Twitter and look at the most recent clip I posted. I posted the exact clip where I was talking about the weekly profile for the week and predicting it from the weekly outlook. So definitely read the document, then go look at this clip, and you'll have all the understanding of weekly profiles you'll ever need and how to predict their weekly profile. And for me, it's basically second nature right now. So I just see this. I know this is open high manipulation, and that's why I'm saying like it's very new for me to be doing these calls. So I do have to get better and to bring you guys through all my understanding of backtesting and all of that. Because right now I'm slow because I'm trying to explain a lot and not very efficiently. But it's gonna get better over time, right? Second call, I believe it's not too bad for the second one. Yeah. Yeah, go for it. You mean this would be your objective following this run to this count, taking out your equal lows? Yes. And would you have winning setups? Yes. Right? And when would you have taken a loss? Well, possibly on Friday, right? That's the only time. Because as you said, Wednesday and Thursday, you would have had winning long setups. But right, you'll be able to revisit this since this is recorded. But as we've seen on that Thursday move, let me just actually, I don't want to be on NQ. Let me return to Thursday and look at the Thursday, which I didn't see any clear bearish ideas because I was looking for bearish ideas, right? So if you were looking for bullish ideas, you did have a few possible objectives, right, along the way. Well, what I noticed is there was a lot of divergence, a lot of SMT, and price was high resistance. But if we zoom out, what do you see? You see a clear buy profile. I don't know if you're familiar, but reversal right here into our highs. Right, so super clean bullish day. And you had bullish objectives. And yes, as you say, would you have been able to frame longs 100% because you did return to a discount? Now I'm analyzing with hindsight. So of course I don't have the same thing as if I was going long. And I told you guys, basically that week on my real accounts, I probably blew two live accounts, two funded accounts. Like really, I don't like talking about it too much, but February was a shitty month for me as a real trader, and I basically was very much in drawdown up until the last week of February. Well, I recouped all that drawdown, thankfully, but it was not the month for me, February. Um, but looking at this, of course, reanalyzing with hindsight, I see that we went lower, which means that now I can tell that, hey, lower prices were the expansion. But yes, as you said, right, you could have framed longs. And I was not trading on Wednesday because it was not a high probability trading day. But basically, I just explained the long way again to tell you that yes, framing longs would have been great. I did not look at any specific long setups because of how my bias would have been short at this specific point, but framing longs would have been valuable. And that's like when ICT says, again, I'm not trying to compare myself to him, but he says it. Sometimes my bias won't be the right one, and you'll get a win, and I'll get a win. Right? No matter your direction, if you actually have a framework towards it based on your high probability model, it should work a high percentage of the time. So no matter if you're bullish or bearish, if your model is based on your higher time frame understanding, and you can frame an idea of going to higher prices and take a high probability entry, then you should win those more often than not, no matter if your bias was the same as me or not, right? And as I said, for me, Thursday would not have been a trade, and then Friday would have been very good. But if you long Thursday and then had your long on Friday as well, you would have also done very good, even with differing bias, right? So it's just understanding that no matter your bias, as long as it's all based on a high probability framework, you should be profitable off of that. That make any sense? Mechanical. Yeah. Yep. Yeah. So of course, I'm gonna tell you that the best way to look at daily bias is gonna be mine. Why? Because I'm a cocky trader. That's just how it is, right? And so, and my approach to this is very simple, and it's pretty much as described. I look at internal to external based on premium and discount and inefficiencies. I look at a daily chart. Whenever my daily is unclear, I like to dive down into a 4 hour chart. And if you want to see examples of this, you'll see all of my weekly outlooks are based off of this. So definitely this is a time where I'll tell you, spend some time, go back to the past and look at my weekly outlooks, and you'll see I was right, but most importantly, why I was thinking that, because I do spend the time to explain not just what I'm seeing, but why I'm coming to conclusions based on what I'm seeing. And of course, I'm not always right. On the weekly outlooks, I do have a crazy high consistency rate at the moment, which is pretty awesome being the start of the Discord. But yeah, just in general, it's very simple approach, and it does offer a lot of consistency because I believe that's how the markets run on, right? Premium and discount, simple inefficiencies, and how the respect or disrespect of these inefficiencies tell you which liquidity to target, right? So that straightforward approach, which you can see through my videos. And if ever you are having a hard time into that, I usually don't like doing that, but Trade for Opportunity is a fucking great guy, and he is awesome. And he has actually made an indicator, which I don't use, but it is a great indicator based on simple logic of basically closes above and below the previous daily candle. All right. So this indicator marks out the previous day high and the previous day low from the blue lines, right? You can see that the blue line is the previous day high, and the blue line here is actually also the previous day line, the previous day low. And what do we see here? Well, it says close below previous day low, bias previous day low. So because this specific day, so between these two lines, right? If I just do this specific day closed below the previous day low, your bias on the next day will be previous day low. And this example failed, but if we just look at this one, we closed above the previous day high, so my bias on Friday would be previous day high. And as you can see from this little table at the top, you'll see a 76% win rate of previous day high and previous day low at 58% win rate, taking into account 72 sample size and 85 sample size. So it's just taking a simple logic, and actually if you look at the indicator and you click on read more, you'll actually see a clear explanation of the logic used. So that is a mechanical approach at bias. So it is definitely great for trading bots, which I do code a lot. This is a very mechanical approach to bias, and it has a lower success rate than, let's just say, my discretionary approach, 100%. But if you're having a hard time, I would definitely recommend looking into this logic, and this indicator is perfectly made for this logic. So if ever you're wondering, that's definitely the best. And see, right now, we would have closed below previous day low. So my bias for the next day, that we don't currently see, right? But my bias for the next day would be close below previous day low. So my bias will be previous day low, which is this blue line right here, right? So straightforward approach, and see here, it worked. Awesome, right? But it's just kind of very high win rate. Pretty much it's on the higher side, and basically a mechanical approach. So I do recommend this, and it's just to give you an idea again, it's the T-Trades daily bias. It's basically logic to implement, well, brought to the public by T-Trades, and that Trade for Opportunity has coded. So definitely worthwhile indicator to check if you're having a harder time. In the meanwhile, while you learn how to do it yourself, right?